SCHD, VOO, Main Street Capital, Realty Income. These are just a few investments that I hold in my portfolios and my taxable accounts. And all of these investments happen to pay dividends, some quarterly, some monthly. But today's video is about those dividends that I've received year to date as well as in the month of March. If you're new here, subscribe to the channel, give this video a thumbs up, and make sure to leave me some comments on the topics that we're going to be talking about today. First, we're going to start with a stock market update. What's moving the market right now? Well, related to one of my investments, which is into the S&P 500, Citibank has just downgraded its equities and lowered the S&P target to below 6,000, citing major tariff concerns after the Trump administration has increased tariffs on China to 145%. If you've been paying attention to the news lately, if you've been to any of my recent live streams, this is something that we've been talking about definitely as we were leading up to Liberation Day, which was at the beginning of this month. There's been so much ups and downs and changes. The increased tariffs on China, the exemption on phones, chips, and computers, all of these things impact our investments, the different companies within our investments. So I just wanted to touch on that in case you've been wondering why the markets have been even more turbulent over the last 2 weeks. This downgrade from Citibank, these type of headlines drive fear. But if you're a long-term investor like I am, you see the opportunity to stay focused and build up those positions that you have in your portfolio that you want more of, that you have the opportunity of picking up low and building up your share size. This is something that I've been doing, especially after Liberation Day. Last Monday and Tuesday, the 7th and 8th of April, I put focus into putting in some limit orders as well as picking up shares of certain positions in my portfolio that I wanted to pick up on the pullback, like SCHD while it was below $25, VTI below 250, and VOO. So as I mentioned already, today we're going to be taking a look at my dividends received in my taxable accounts. I have portfolios for different reasons, and I have a focus of having investments that I can touch before the age of 59 and a half. And that's why I'm investing outside of retirement. Another priority to me is investing on behalf of my daughter. It's a quarter end, so there's extra payments that I'm going to be able to share. I do have a few investments that pay monthly, but on the quarters, the dividends are always more. Some of my key dividend payers are VOO, which is the Vanguard S&P 500 ETF, VTI, which is another Vanguard investment that covers the entire U.S. stock market, the Real Estate Investment Trust, Realty Income, as well as Main Street Capital, which is a business development company. I'm going to highlight a few, but I'm getting dividends from these areas as well as a few blue chip stocks. And there'll be no breaks for me. I'm going to continue investing even on the red days or red years in order to build up my positions and focus on my long-term goals. So the first investment that I want to take a look at is Main Street Capital. It's highlighted here as one of the safest high-yield BDCs, business development companies. It's one of my personal favorites. It pays monthly and even an additional dividend payment on the quarter. It isn't just another dividend stock. Main Street is widely regarded as one of the safest, most reliable ones out there. I'm going to go through a few points of why it's a standout for me and why you might want to consider it. And before we get started, just to share on the day, it's up 2.83%. It's currently $53.11 per share. But just like the entire stock market, year to date, it is down 9.34%. But just like all of the holdings in my portfolio that we're going to be talking about today, it is nice to still be getting that steady dividend payment while the market is down. And we're waiting for our positions to recover. Back to why Main Street Capital is a standout investment. Consistent monthly dividends. Maine has paid an uninterrupted monthly dividend since its IPO back in 2007. And that includes those hard times like we went through in 2008 without ever cutting its regular monthly dividend. So that's the type of track record that I want in my portfolio. They have a diversified portfolio of over 150 companies, private businesses and industries ranging from industrial services to tech and consumer goods. So, this diversification lowers the risk that any one company failing or struggling could impact your income. They focus on secured loans, which means if a borrower defaults, Maine has legal rights to the company's assets. It's a built in layer of protection for both the company and its shareholders. They focus on staying conservative with the amount of debt that they allow their company to get into so that when we are going through these rough times with the economy, they're not adding any financial pressures. They also have spillover funds, which equals an additional cushion. When Main Street sells an investment for gain, they keep some of those earnings aside as spillover income. This creates a cushion of cash that they can tap into when needed. These are just some factors that have it rated by Simply Safe Dividends, as well as other financial institutions, as a super safe dividend investment in the category that still gives us that high dividend yield. Now let's take a look at Realty Income. On the day, up 1.90%, current share price $56.27. Year to date, up 5.35%, but when it comes to share price, this one is definitely down from its highs back in 2022 of above $70. Now, Realty Income is known as the monthly paying dividend company. It is a REIT, a real estate investment trust. This is a way of getting exposure to real estate without actually owning physical property. Like Main Street Capital, this is another steady monthly paying dividend company. They've paid out 649 consecutive monthly dividends. That's over 55 years. And that's including over 100 dividend increases since going public. Realty Income owns over 1,500 commercial properties across the US and Europe, and their tenants include household names like Walgreens, 7-Eleven, and FedEx. They've recently acquired Spirit Realty, which expanded their portfolio and added thousands more income generating properties. They focus on triple net leases, which means tenants pay their taxes, insurance, and maintenance. And this keeps Realty Income's costs low and cash flow steady. So, when it comes to my portfolio and Realty Income, I have not been thrilled with the sheer price appreciation, but it is still highlighted, as you can see here, by analysts at Yahoo Finance as one of the most undervalued dividend REITs going into 2025. So, you will always be getting that steady monthly income. And by holding on to it, I'll be ready for the potential upside as interest rates fears cool down. And in time, we might get that share appreciation as well as that steady dividend monthly payment. So I'm holding on to all of my investments and staying the course by continuing to build out some of my positions. I added 12 shares of SCHD to my portfolio as a part of my strategy and making sure to take advantage of these lower prices that we're having right now. So I'm holding on even when the headlines and the stock market is having a roller coaster ride. I'm still receiving my monthly and quarterly dividends. 2025 is a rough market to be investing in, but as always, I'm not investing emotionally. I'm just focused on my long-term goal of building wealth. Okay, so here are my dividends received in the month of March. I have 3 portfolios that I do my taxable accounts in, one at Moo, Public, as well as Webull. So over on Moo, my main focus are those monthly paying dividend companies as well as SCHD. So over there, I have Main Street Capital. I received $21.76. I have a couple of shares of Microsoft. I received $1.70. Realty Income, I received $28.88. SCHD, $9.59. SPHD, $5.28. And then over on Public, that's where I do my $10 daily investment into VTI. I received $27.52. on Webull. That's where I would describe my investments as my growth portfolio. I have Google, Meta, Target, as well as my ETFs that are those foundational investments for my portfolio. Over there, I received a total of $60.98, with my largest dividend coming from VOO at $33.45. And just to take a quick look, year to date, I've received $265.52. And this being a quarter end result, we see here that on the quarter ends, there are additional companies, so the quarters are always higher. In January, I received $50.74, February, $58.77, and now in March, $156. So I am reinvesting my dividends in order to build up my share size. I'm realizing that whether it's tariffs or other types of things that shake the market and cause all of this volatility, I have to be ready for it as a long-term investor. But even when those headlines are scary, I'm going to continue to invest and continue to focus on adding to these positions, as well as reinvesting the dividends in order to achieve my goals. So if you made it this far, I'm going to remind you again, like, subscribe, hit that notification bell so you can keep up with all of my videos and live streams. Check out my referral links for Webull and Moomoo, as well as channel membership. Those are all ways that you can support the channel. Leave me a comment. Let me know what was your biggest dividend payment received in the month of March, and what positions are you focused on building up when there is a pullback. So thanks for watching. Okay, bye.